G'day everyone, welcome back to Pete's Investing. Today is 1st of April 2023. This is the US dollar basket update. All three timelines, the daily, the 4-hourly and the hourly, are all in decline, so only short positions to be taken, no long positions. Let's drill down on each of these. On a daily first, you can see there it's currently in this range between this diagonal descending trend line and this support line. There's also a key resistance area up here, but it's way off in terms of consideration for that one. I did draw this Fibonacci retracement here. You'll notice the price has bounced down to the downside just below the 38% level. It got as far as the 38% level before rebounding down to the downside, and that's in line with this descending trend line. So against those new to the channel, we only take short trades when the moving average 400 of the CCI 1500 is in a downtrend, as it is there. And you would have stopped taking long trades when it broke below the moving average at that point there. That applies. So you only take trades in the lower time frames based on the higher time frame. On the 4-hour chart, you can see there more clearly. I've just drilled into that a bit more. I've put a Fibonacci retracement. You can see there it's come back and it's broken through the 61% level, which is our key level of potential continuation of the, in this case, it was going up. So in the event of a continuation of the uptrend, we would have wanted to see it bounce off the 50 or even the 61% level. As soon as it broke below that, that's a weakening sign, and we've got to be careful. It may collapse into a short positioning further. So as you can see there, it's currently consolidating within this diagonal ascending and descending trend line, and it's currently sitting at the 78% retracement level, which is pretty bearish at the moment, and that's in line with the CCI moving average below, still in a downtrend. On the hourly chart, I've put here again a couple of things to notice here. First of all, I put in a retracement, a Fibonacci retracement. You can see there in that time between that high and that low, it's bounced below the 50% level, again, which is a continuation of, in this case, a downtrend. And I've also put in a Fibonacci extension. So should this break this lower ascending diagonal trend line, we're going to see it probably go further down, and it may actually reach the 78%, which is this key support area. And where it stops, we're not sure yet, but that's our first level of resistance, this diagonal ascending trend line, if it breaks to the downside. Otherwise, we may just see it consolidate in this wedge, which is forming at the moment. It may just go up to the upsides in the short term. We'll see how it goes in the coming hours and days. Anyway, in summary, only short positions so far. Avoid long positions. And to understand how to properly trade using the average down approach, reference some of the links in the description below. Support us on Patreon. Subscribe and like, and see you in the next video.